Hi friends, I had subscribed to this chit fund in May 2022 for sum of rupees 3 lakhs, and I have this friend whose savings are only through chit funds. My family too think chit funds are good saving scheme. What comes to your mind when you hear the term chit funds? An investment scheme or perhaps a savings plan for an easy or fast access to a big lump sum? Anyway, chit funds are not savings plan or investment scheme. I learned it through my experience with chit fund. For people who don't know about chitty or chit funds, I will just explain the same in 3 to 5 minutes. Imagine a scenario where 10 individuals come together to start a chit fund of rupees 1 lakh. Each participant contributes 10,000 rupees monthly over a span of 10 months. The group will have an organizer who ensures the smooth functioning of meetings and auctions after deducting a small fee, say 5% for their services. In Kerala, we have this KSFE. In this case, the total sum collected amounts to 1 lakh rupees in first month. Now, let's assume 3 participants are in need of money and they bid for this money. The lowest bidder wins the bid and receives the fund minus the commission fees, that is the organizer fee. For instance, if person A bids 90,000, person B 70,000, and let's take person C as 80,000. Of course, the person B, the lowest bidder, gets the amount of rupees 65,000 after the commission of 5% to the organizer. The remaining 30,000 is the profit, right? That is equally distributed among all the participants, each getting back 3,000. So the next month, instead of rupees 10,000, you have to pay only say rupees 7,000. This process continues monthly until the 10-month period is over. Month after month, this profit of rupees 3,000 from the bid reduces, and after the 7th or 8th month, you will end up paying full amount, that is rupees 10,000, as number of people participating in the auction reduce. The last person will get the maximum amount of rupees 95,000. That is 1 lakh minus the 5% organizer fees. Over the period of 10 years, our person B, who was the winner in the first auction, is likely to contribute more than his received sum of rupees 65,000. That's why chit funds are personal loans with lower rate of interest. However, the successful bidder must pledge an asset such as gold, property, or an existing FD of equivalent value to liquidate this sum from chit fund, just like a security in case you default the payment. There are places with instances where organizers have even absconded with the investor money. Therefore, choosing a government registered chit fund house or a reputable private company is always a prudent decision. Let me tell you the lessons learned from my personal experience with chit fund. I joined in this fund in 2022. I was not in need of a personal loan, to be frank. I joined in this fund on the advice of a relative for fast access to a bigger amount, which was not actually required at that time. My chitty was for 30 months and I had successfully bid for an amount of rupees 2.69 lakhs after the 14th month. And I could not receive the money in hand because I couldn't provide security like gold or property or my existing FD to liquidate this money. So I had to deposit it as fixed deposit in chit fund house itself. Of course, that amount is also earning an interest equivalent to a FD. I am still paying the monthly subscription, and as per my calculation, I will end up paying 2.8 lakhs. This is what I regret. But yeah, the interest I am earning on FD at chit fund house will make up for my losses. But that was not the whole intention, right? Even if I am the last bidder who gets rupees 2.85 lakhs, which is the maximum amount, my profit will be only 1.7% after 2.5 years of investing. Imagine just 1.7% only. So, in a nutshell, a chit fund isn't a savings or investment scheme, but rather a method of procuring a personal loan at a lower rate of interest. It's a suitable option if you need to borrow a specific amount for a purpose, be it a small scale or large scale business. For emergency purposes, you should have an emergency fund of 6 times of your monthly expense in FD or a sweep in FD or a debt mutual fund. Don't depend on chitty for emergency fund. But yeah, once an emergency fund is consumed, and in order to replenish it fast and based on your family, your job situation, etc., you can consider a chitty to access credit fast. The primary purpose of chit fund is to provide easier access to credit. But if you can wisely invest the lump sum you received to an equity fund, you have the chances of money growth in long term, say after 5 to 6 years. For that, you have to carefully and tactically calculate how and when you have to bid the amount and invest in equity to maximize the returns. But I have seen in most of the cases this reinvestment of amount to equity is not happening. Just like me, people will either keep the bid amount in FD with the organizer itself or will transfer the same to the personal bank account, may either spend the amount or leave it in the FD account itself. It's a system, means the chit funds is a system that when used wisely can be beneficial. If you want a detailed video on how to reinvest the chit fund amount in equity, please comment. Remember, informed decisions are the most profitable ones. Chit funds are not a saving scheme or investment scheme. Also, before joining a chit fund, think if you have that security material like gold or an existing FD or a property of equivalent value to take the bid amount out of the chit fund scheme. So the next time you hear chit funds, you will know exactly what it entails. If you find this information useful, subscribe to this channel for knowledge on personal finance for beginners. Thank you, dears.